Currency exchange rates are determined by a combination of economic, political, and psychological factors. Here's a concise overview of the science behind currency exchange rates. Market forces. Exchange rates are primarily driven by supply and demand dynamics in the foreign exchange (forex) market. When demand for a currency increases relative to its supply, its value appreciates against other currencies, and vice versa. Economic indicators. Key economic factors influencing exchange rates include interest rates. Higher interest rates attract foreign capital, increasing demand for the currency and strengthening its value. Inflation rates. Low inflation generally supports a currency's value, as purchasing power is maintained. Economic growth. Strong economic performance attracts investment, boosting demand for the currency. Political stability and policy. Political events and government policies can significantly impact exchange rates. Political stability. Countries with stable governments and predictable policies tend to attract foreign investment, supporting their currencies. Monetary and fiscal policies. Central bank policies, such as interest rate adjustments and quantitative easing, affect currency value by influencing inflation and economic growth expectations. Trade balance. A country's trade balance, exports minus imports, influences its currency. Trade surplus. Exporting more than importing leads to higher demand for the country's currency, strengthening its exchange rate. Trade deficit. Importing more than exporting can weaken a currency due to higher demand for foreign currencies to pay for imports. Market sentiment and speculation. Investor sentiment and market expectations about future economic conditions can drive short-term fluctuations in exchange rates, often based on news events or geopolitical developments. Currency interventions. Central banks and governments may intervene in currency markets to stabilize exchange rates or achieve policy objectives, such as export competitiveness or inflation control. Global factors. Exchange rates can be influenced by broader global trends, such as commodity prices, geopolitical tensions, and global economic cycles. Exchange rate regimes. Different countries adopt various exchange rate regimes, from freely floating to fixed or managed exchange rates, impacting how currencies are valued relative to each other. Understanding the science behind currency exchange rates involves analyzing these multifaceted factors to predict movements and manage risks in international trade, investment, and monetary policy decisions.